Welcome to What's Trending. I'm Todd Rosenbluth of TMX VettaFi. As you can see, I'm joined here with Cynthia Murphy. Cynthia, good to have you here in New York.
Hey, it's always fun to be in New York with you.
So it's been a really exciting third quarter for the ETF industry. A lot of major trends that have been going on. I think we'll cover some of that as well as let's look forward to Q4. How about that?
Yeah, this is our latest look at what's trending in the ETF market, and we want to focus on the third quarter, which we're about to wrap.
So we've seen really strong demand for low-cost, broad market ETFs. They again continue to be driving the overall industry. We've seen S&P 500-based products, even the NASDAQ 100 low-cost products. They've been popular, right?
Yeah, so if you can, we're going to share some numbers with you all, which is, I got it here, $330 billion in ETF flows in the third quarter, which is a pretty strong, healthy number.
So we're recording this just before the quarter ends. So when you see the numbers, don't worry if your numbers are different than our numbers.
Yeah, so this is as of today, September 24th, when we are recording today here in New York City. A lot of that money has actually landed again into low-cost beta products like your ETFs, like VOO, which had another $54 billion in inflows this quarter. SPLG, which is the Spider lower cost S&P 500 fund, which competes with SPY, but it's a completely different target group. That had another $8.5 billion. VTI, $8.7 billion. Just these three ETFs took about 30% of the equity flows this quarter. So that appetite for your low-cost building block, long-term kind of sticky asset pool has been a persistent theme in 2025, and we're not seeing any signs of that stopping.
And I think that's a great sign. For many people, that's the starting point, the building block. And if they're adding equity market exposure, either they're moving from fixed income into equities or they're moving from mutual funds into ETFs, that's likely a starting point for them. So that's exciting. That's the boring part, I would say, of what we've seen in the marketplace. I'm going to jump to what is perhaps the more exciting part of it. The third quarter was also very strong for cryptocurrency ETFs. We saw a strong demand for both Bitcoin and Ethereum ETFs, and we've seen growing supply of some of those products as well from some other providers, right?
Yeah, so if you look at top 5, top 6, top 10 ETFs, IBIT and all our Bitcoin products there, what's kind of new this quarter that we didn't see before is the Ethereum ETFs, over $10 billion just this quarter into 3 Ethereum ETFs. So it's been a big quarter for crypto. So you have this interesting dichotomy between low-cost beta, crypto, Bitcoin, Ethereum, and then the third leg of this stool is the low cost, ultra short bond exposure.
Wait, before we get there, can I do one more thing? Because it's tied to crypto. So at the end of the quarter, we saw the SEC actually establish an easier process for cryptocurrency ETFs to come to market. And we saw Grayscale take advantage of that. We saw Rex take advantage of that with some ETFs that have come to market that's beyond Bitcoin and Ethereum. So the floodgates are likely to open in terms of the supply of products. That's something, not from a flow standpoint, those new ETFs barely saw the flows, but they hopefully will, and we'll see that in the fourth quarter and into 2026. Cryptocurrency is become part of our ETF ecosystem.
Yeah, I think anytime you streamline a process that, they did for exchanges, that they're like taking all the roadblocks for product innovation, you just see things pop up. And we already saw it. We have Solana ETFs, we have a 2XXRP ETF. So crypto is definitely a category of its own, and it has a lot of flavors and strategies to play around with. And we're just going to see it multiply, I'm sure.
So now
Let's stop boring again.
We're back to boring. So ultra short fixed income ETFs continue to gather assets in the third quarter.
Listen, right? Specifically SGOV, this quarter, another $8 billion. It's almost at $30 billion this year. It's been a massive amount of money just parking that cash in that ultra short term bond exposure. I think of it as a kind of a defense position. It's picking up good yield without duration risk. We continue to see that play. It might be a theme that starts to change as rates come down and maybe folks start buying into duration. But in 2025, as Gov has had a phenomenal year, and that demand for the ultra short end of the curve has been huge.
So we did a week or so ago a fixed income symposium And one of the questions, actually, I think you asked the audience whether or not this was going to encourage them, this being the rate cut, to move off the sidelines, move cash into short-term fixed income ETFs. And that was quite popular. It's actually, they should have done it perhaps before, and in many cases they did. As you mentioned, ESCO was quite popular. But with the Fed rate cut, we could see people not only move cash into short-term fixed income, but we could also see some of those other categories that take on a bit more duration that could see some of those benefits in the fourth quarter, right?
Absolutely. I think the theme of duration was a big theme in our fixed income symposium. And a lot of the questions we asked advisors, the question about appetite for duration, tolerance for duration, really on the rise. So I think we're going to see an interesting 2026 where the fixed income exposure starts to move down the yield curve.
So we talked a lot about flows for good reason because we're on pace for a record year, but there's also some exciting things and innovations that are happening and that happened in the third quarter. We at VettaFi are the index provider behind the Simplify Private Credit ETF. The ticker is PCR. That ETF recently launched. Private credits, that also came up quite a bit in our conversations with advisors. They're interested in getting the benefits of diversification and a liquid form of a less liquid asset that PCR and some of the other private credit ETFs offer. So
yeah, definitely a category that we're just starting to see innovation in this category. We know we started kind of in January, really. And CLOs are a popular way to access this space. I pulled out just the data on all the CLO ETFs. The AAAs are the most popular, but there's other tranches of CLOs out there. All of them are asset gatherers this year. So a lot of money has been chasing this alternative credit story. And I think is a theme we just started scratching the surface on.
So a lot going on in the ETF industry. It's a pleasure to be here with you in New York to discuss this. We're doing this somewhat regularly. I'm so glad to be able to do it with you.
Yeah, it's always fun. And we hope you enjoy our quick look at what's trending in ETFs. We try to do this regularly, and you can find us on ETF Trends, ETF DB, or in our YouTube channel. Thanks for joining us today.